In 2022, BlackRock owned over 240,000 single-family homes in the U.S., making it one of the largest landlords in the country. That's according to a report by the Private Equity Stakeholder Project, which analyzed public records and filings. The data shows that BlackRock's housing portfolio is worth over $17 billion, with an average home price of $340,000. But here's the thing. BlackRock didn't always own this many homes. Their housing portfolio has grown by over 500% in just a few years. The company's aggressive buying spree has been fueled by investors seeking higher returns in a low-interest rate environment. As a result, ordinary people are getting priced out of the housing market, with many unable to afford homes in their own neighborhoods. The simplest explanation is that BlackRock is just a savvy investor, snapping up undervalued properties and turning a profit. But some have raised concerns that the company's dominance in the housing market is contributing to a broader crisis of affordability. A 2022 investigation by the New York Times found that BlackRock's ownership of single-family homes has led to higher rents and fewer homes for sale. The Times analysis found that in some neighborhoods, BlackRock-owned homes made up as much as 20% of all single-family homes. That's a significant concentration of ownership, and it's raising questions about the impact on local communities. Some have pointed out that BlackRock's business model is designed to maximize profits, not provide affordable housing. The company's focus on institutional investors and high-end finishes has led to accusations that they're catering to the wealthy at the expense of ordinary people. But BlackRock isn't the only institutional investor buying up homes. Other big players include Invitation Homes and American Homes for Rent. Together, these companies own hundreds of thousands of homes, and their influence is shaping the housing market in profound ways. For example, a report by the Urban Institute found that institutional investors are more likely to raise rents and evict tenants. That's not to say that all institutional investors are the same, or that they're all contributing to the same problems. But the trend is clear. More and more homes are being owned by giant corporations, and that's having a profound impact on the housing market. So what's the solution? Some have called for greater regulation of institutional investors to ensure they're not contributing to unaffordability. Others argue that we need to fundamentally transform the way we think about housing, moving away from a model that prioritizes profit over people. The debate is complex, with valid arguments on both sides. But one thing is clear. The rise of institutional investors in the housing market is a trend that warrants closer scrutiny. As the data continues to roll in, one question remains: what's the long-term impact on communities and families? To understand the issue better, it's essential to look at the numbers and the trends. In 2020, institutional investors bought around 15% of all single-family homes sold in the U.S. By 2022, that number had risen to over 25% in some markets. The trend is not limited to the U.S. Other countries are seeing similar patterns. In the UK, for example, institutional investors own a significant portion of the housing stock in some areas. The issue is not just about the quantity of homes owned by institutional investors, but also the quality and condition of these homes. Some reports suggest that homes owned by institutional investors are more likely to be in disrepair. On the other hand, some argue that institutional investors are bringing much-needed investment into previously neglected neighborhoods. The reality likely lies somewhere in between these two perspectives. As we dig deeper, we find that the issue is complex and multifaceted. It's not just about BlackRock or any single company. It's about a broader trend in the housing market. To get to the bottom of this, we need to examine the data, the business models, and the impact on communities. One thing is certain: the housing market is changing, and institutional investors are playing a significant role in that change. Whether that's a positive or negative development remains to be seen. For now, the question on everyone's mind is, what's next for the housing market? Will institutional investors continue to dominate the market, or will there be a shift towards more traditional ownership patterns? Only time will tell, but one thing is clear: the current trend is unsustainable. The numbers are stark, and the implications are far-reaching. As we move forward, it's crucial to consider the human impact of these changes. For families and individuals priced out of their own neighborhoods, the issue is not just about numbers, it's personal. It's about the dream of homeownership, the security of a stable place to live. As we explore this topic further, we need to keep these human stories in mind. The data and the trends are important, but they're not the only story. Behind every statistic, there's a person, a family, and a community. Let's not forget that as we examine the role of institutional investors in the housing market, the goal should be to understand the issue, to shed light on the complexities, and to explore potential solutions. By doing so, we can work towards creating a more equitable housing market for all. One that prioritizes people over profits. To achieve this, we need to continue the conversation, to keep asking questions, and to seek out the answers. The issue is complex, but it's not insurmountable. With careful analysis, thoughtful discussion, and a commitment to fairness, we can create a better future. A future where everyone has access to safe, affordable housing. That's a goal worth striving for. And it's a conversation that starts with understanding the role of institutional investors like BlackRock. By examining the data, the trends, and the human impact, we can gain a deeper understanding of the issue. And it's only by doing so that we can begin to explore meaningful solutions. What does the future hold for housing markets dominated by giant corporations like BlackRock? Only time will tell.